you come up with a strategy or more hard than launch in the wrong time. It's all about timing the market, understanding the cycles, understand what happened in the previous cycle and how is this cycle is different and when we expect to get out of this cycle.
So looks like we got a pretty decent amount of people. You want to wait another minute or should we get started, Barry's?
It's just 3 minutes in yet. Let's just wait maybe 5-6 more minutes and then start if it's fine.
Okay.
Okay. Scott, you can speak if you want.
Anyway, guys, thanks for starting.
No, mute yourself, man.
Bro,
You're talking.
Get stuck.
Leave Scott alone, Alex.
Yeah, leave me alone.
All right, I'm sorry.
I like your cool cats. I've been watching them cool cats. I think I'm gonna pick one up. It's on my list.
I mean, hey, maybe we'll look to see if market gets even worse, but
Yeah, not yet.
easy time.
Not yet.
I think 3 is where they'll stay. I don't think they'll go lower than 3. 2.7, 2.8, maybe. If you're lucky, you can catch one there.
It went to 2.8 just because we
Yeah.
want to get quick sales, so maybe we'll catch one of those.
It really
Or
depends.
get offers.
It depends a lot on ETH too. Like, you know, every time ETH starts knifing down, you see NFTs people start panic selling. So those are probably the best days to buy. Like last night, if you look at last night, I think Bored Apes were like 72 ETH. You could have picked one up. Now the floor is 87. Mutants were like 14. Now they're 17 and a half. So if you have the conviction buying when ETH is knifing like that, always the best time because people
Malos, we've seen together yesterday sales on Google at 5 ETH.
Yeah, 5 ETH sales on Doodle yesterday. Yep.
Yeah, that would have been a steal, man.
While ETH was also at like sub 1100. So like, you know, if you have stables and you buy ETH while it's dumping, that's how I bought my Jira. I bought it that first dump on ETH when it dumped down to like 1700. I bought ETH right there, and someone was panic flooring his fucking Jiras, and I sweeped it right off.
No, nice.
You're always gonna get some people who just start like panic flooring stuff when ETH is dumping. Which always happens.
Yeah. Trying to catch a kaiju or something, a gem kaiju.
Oh,
Keep an eye on them, though.
Kaiju's. Yeah, I've been watching Kaiju's actually. I was just posting about that in Disto yesterday. I think the Genesis Kaiju's are like 2 point. What were they at yesterday? I saw them at 2.3. Yeah, damn, someone bought them.
Yeah.
That's a nice price.
Yeah. Somebody was telling me to trade my cool cat for one of those, and I can even get money off the cool cat, but might as well just pick up another kaiju and hold both. I think.
My thing
Cool
is
cat's
like,
a good play.
my thing is just like,
Same with kaiju.
as far as deploying capital right now, like, is it the best place to park your capital while ETH is not stabilized? You know, that's like the biggest thing for me. Like if you think about it, like the people who bought NFTs when ETH dumped to 1700, they thought they were getting a steal, but now ETH is 1200. So
Yeah.
you got clipped just on the ETH arbitrage there. Not to mention if floor prices went down more. So I think we need to get, you know, once ETH stabilizes, that's when I think we're going to see more positive price action in NFTs.
We are not at the bottom yet. We might see more prices going down and ETH going down. So who knows? We might be able to pick up some Googles at $5,000.
That's my target. I want
Exactly.
Moonbirds and Doodles at 5K USD. That's when I'll scoop them up if they get there. We'll see if it happens. We're going to cover everything, all that's going on right now in the markets, in the economy, why I personally don't believe that we've bottomed yet, and just go over all the things that we need to pay attention to that will kind of help us understand, you know, if the market's going to reverse, what metrics to look at, what are the most important key factors right now that are kind of dictating what's happening in the markets right now, because it's not, you know, the technicals are irrelevant right now. You know, you see a lot of people talking about support. It's all macro fundamentals that are driving prices right now. So we're going to go over all that stuff, what's affecting us, you know, how all these, you know, macro factors and stuff that's happening in the broader global markets and equity markets. How does it affect us here in Web3 land and NFT land? So yeah, I think we should get started, right, Barry? It's about 3:08.
Manos, introduce yourself. Let's let everyone know who we are, where we're coming from. Then we can start with the content.
Okay, my name is Manos. I have been in crypto since around 2017. Started investing towards the tail end of the first bull cycle in 2017. I think I bought my first coin around December. Obviously didn't sell anything, went into crypto winter, kind of stepped away from the space for a while, which was a big mistake and something we're going to talk about in this session today. And then in early 21, I got back into it really heavy, and that's when I started learning technical analysis and fundamental analysis and macroeconomic fundamentals and how they all tie in together. I started my own mentorship server and my own private alpha server back in December. And through that, I ended up getting a job with Disto about 4 months ago as an analyst. Since then, I've become a core team member and advisor for Disto. I'm still an analyst there as well and an alpha caller. And I recently founded Shadow Labs with Nomad and CryptoPal. We're a Web3 agency and an NFT launchpad. So yeah, that's my background. KP, why don't you go ahead?
As you noticed, everyone calls me KP. I started my career in crypto back in 2017. I was lucky to get few Bitcoins at like $1,200, few ETH around $100. Didn't even look at the chart until 2021 to wake up to them to my bag over $150,000. From there, I sold, ate into some altcoins, small caps, and shitcoins, and I've seen my bag at one point at 700K. Didn't sell. We got into May bear cycle in 2021. It went all the way down to like $70,000-$80,000. In September, started an NFTs, started with like 10 ETH. Lost it all based on what I was learning from YouTube. Had to start all over again with point one. Started to teach myself how to backtest projects, how to see patterns. And from there I became an alpha. I don't want to call myself an alpha cooler. I'm more into the education part. I am more into like finding and analyzing projects. Joined Best team back in January 2022. And 2 weeks ago, we started Shadow Labs, myself, Manos, and Nomad. And now we are partnering with Magma.
Okay, so let's jump into the first point of today's topic, of today's class session, whatever you want to call it. The first topic is we're just going to do a market overview of what's going on with crypto and NFTs right now. So I shared my screen. I just have my trading view up. I'm going to have a couple charts up. So, as everybody obviously knows, we've had a pretty bloody 2 months in crypto and NFTs. Recently, we had a major sell-off in ETH the past 4 days. Same with BTC. BTC has come down into a very critical level. And, a couple weeks ago, I was anticipating 1,200 and 22K on BTC to be my bottoms for this bear market. But I was expecting to get there in, about 2 months, 1 to 2 months. We got there very quickly. A big reason for this is obviously, as I posted last Friday, we had CPI come out that was the highest in 40 years. And at the same time, we have the issues going on with Celsius, which we're going to speak about, the insolvency issue with they're facing a liquidation crisis. They paused withdrawals for all their members. So that's another very serious situation that's going on, and that could potentially get much worse. But overall, after this sell-off on CPI news, the stock market also sold off pretty heavily. As you can see, if you're seeing my screen, the S&P 500 gap down 2 days in a row. What this means is that, as you can see, there's no gaps in ETH. The reason for that is it trades 24 hours a day. the stock market doesn't trade 24 hours a day. It's open from 9:30 a.m. Eastern to 4 p.m. and it's closed on Saturdays and Sundays as well as federal holidays. So when you see these gaps in price, that's because the S&P opened up lower the following trading session than it closed the previous day. So that's why you see these gaps in the chart. It's not a glitch. It's just the sell-off happened pre-market, and this day's trading session opened up substantially lower than it closed at the previous day, which was Friday. And that's why you have that gap down. So as you can see, we had this initial sell-off in the equity market starting around, beginning of April. We flushed down here into a very critical support level on the S&P 500, which has been a big support level since 2009, since the global financial crisis, which was 380. We bounced from there. And as I was, I've been posting on my Twitter, what happens is the charts were just simply a little too extended to the downside. As you can see, whenever we have a steep sell-off like this, they're going to bounce and come back up to retest some of these moving averages and important levels before selling off again. So this was just a fake little bull trap bounce. We've been selling off since we came up to retest. These are moving averages and exponential moving averages. They, depending on what setting you have them on, basically they take, this is the daily chart. So the 21, for example, takes the past 21 daily candles and gives you an average price. So these are good indicators to kind of act as support and resistance lines on the way up and on the way down. So when we begin to flush below them, usually they'll come up and retest them again. And that's what we're seeing happen here. We saw the same thing happen on ETH when we first flushed back down here. We had to come up and retest them. That's just the way that the charts moves. Institutional investors use these indicators as additional support and resistance lines. So we had that initial flush down to the 1700 level. We kind of teetered around here for a little bit. And then the CPI news came, the Celsius issue came, and you saw another nasty sell-off. I'm going to see what this, we had a 40% sell-off. Wow, another 40% sell-off in ETH in 5 days. BTC, I don't know if BTC saw as steep of a drop. Let's check. 31%. So overall, still pretty rough. If you go back up to the top here from our all-time highs, we're down 56%. And traditionally in bear markets, you'll see ETH and BTC correct between 80 to 90%. So we could conservatively say that there's potentially still some more room to the downside. We flushed into major support levels here, so we're going to bounce here. And once again, as you can see, we're very extended. So the same thing is going to happen. We're going to see most likely another bounce, especially on the weekly chart. As you can see, we're very far down. We just dumped very hard. So we're and on top of that, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 red weekly candles in a row, which, as you can see on this chart, has never
happened in history.
Yeah, it's never happened before. We've had nasty sell-offs like this in May, but we've never had, this was probably the worst, but even in here, we had 1 or 2 green candles. This is just 3 months of straight red candles. So most likely we're going to see some type of bounce. There's an FOMC meeting tomorrow with the Federal Reserve where they're going to announce if they're going to hike interest rates anymore, or if they're going to keep it at 50 basis points. Right now, they're planning to raise rates by 50 basis points for the next 3 or 6 months. I forget what it was. And now there's a lot of speculation that they may have to raise them even higher because inflation came out Friday so much worse than people were anticipating. So that's also why you're seeing a steep sell-off in the equity markets, because markets are always forward-looking. So they attempt to price events in before they happen, right? So when investors see that CPI numbers come out at a 40-year high, worse than they expected, what they're going to assume is that the Fed is most likely going to have to come out and raise rates more than they have been because their current policy isn't working. They've been raising at 50 basis points and inflation is still running rampant. So they need to raise it higher. So the market is pricing that in. Now, if they come out and say that they're not raising rates higher, it's going to stay at 50 basis points, we might see a bounce tomorrow we may see a bounce either way if they're already pricing the increased rate hike into the market now. But either way, any bounce that I believe will happen in crypto or the equities markets right now is a bull trap. I don't think we're going to reverse here. So for the time being, I'm essentially still flat on my stance on the crypto market and the equities markets, aside from the small dollar cost averaging that I'm doing into blue chip altcoins, not picking up large chunks of crypto or large chunks of NFTs right now. If we look at Dune Analytics, yesterday came in at 27 million, which is a little better than the past couple days. We were at 19 million for 2 days in a row, which as far as I know, I've never seen volume that low since I've been in the space. I know even in
I've been through October to December bull cycle. The lowest we have seen back then, 30 to 40 million.
Yeah.
And keep in mind, back then we had 30 to 40 million, while Bayek was 30 ETH, Mayak was 3 ETH. We had no doodles, no Azuki. So we had less projects, we have lower flows, and we still had 30 to 40 million dollar volume. So it's not even comparable to have 40 million now. 40 million now is like 10 million back in November or
right.
December.
Right, because that same 30, 20 million is getting spread across thousands of projects now, whereas before, right, back then, there was far less projects available on the market. So yeah, we're at extremely bearish lows as far as volume goes. Yesterday we saw a bit of an uptick in volume, 27 million, still very bearish. We're still sub 30, basically, every day. Last week in the beginning of June, we did see somewhat more positive price action where we were pushing 40 or high 30s for a couple days, but then we just trended back down into over the weekend into the 19s.
Manos, again, that uptick came from 2 or 3 projects only. It wasn't market wide, it was goblins.
Yeah, this
goblins meta, we're all gonna die. These projects. So even though we had an uptick in volume, the volume wasn't on the macro NFT space.
Hey, Neon, can you mute yourself, please?
Thank you. Thank you. So again, the uptick wasn't like well distributed over most projects. It was mainly going into Goblin and all the derivatives, that meta of Goblin and shit projects.
Yeah, it was flowing all into derivatives and free mints and goblins and shit, literal shit projects like I Poop It NFT and the Shit Beast and all that stuff. If we look at OpenSea right now, I think Shit Beast actually 0.7 for Shit Beast.
Manos, may I cut off to ask a question as well?
Sure. Yeah.
Okay, great. By the way, when you guys first started, my computer rugged me, so I wasn't able to answer you. Sorry about that.
That's okay.
But yeah, I think it's okay for people to cut off sometimes and ask questions, right?
Sure. Yeah, absolutely. Absolutely.
What do you think?
Yeah, absolutely. Before we move on to another topic, please, if you have a question, just unmute yourself and ask me. That way we can address it while we're still covering that topic before we move on to the next segment.
Yep, great. So about this, so to me, this whole inflation fear in the US, and again, if there's anything like hyperinflation in the US, it will definitely spread throughout the world. And I believe that this fear is a little bit similar to the fear of when COVID first hit and people started panicking at that time. So I'm curious, like right now you're comparing like the volumes, for example, with the last bear cycle, with this bear cycle, but do you think maybe this bear cycle at this point in time, right now, maybe examples when COVID first hit, and do you remember the charts at that time? For me, the gold USD chart is like stuck in my brain. It did such a huge dip for maybe a week, maybe a few days, because of the whole panic and everything, people like losing their minds and just panic selling everything and converting into USD. Do you think that it might be similar to that? And do you think maybe comparing this time to that time might be accurate? Or do you believe this is much more long-term and this is more than just panic selling and everything else?
So here's the thing. The crash that happened from COVID was not a market correction or a recession. It was a flash crash and a black swan event due to a global pandemic. So you can't even really count it as a bear market. It wasn't a bear market. It only lasted, a week or so before we had an insane V-shaped recovery and the Fed started printing an insane amount of money, and we've been trending up ever since. And even the bear market last year in NFTs is not comparable because that was a micro bear market within the NFT space, which is a very, very small sector, probably one of the smallest asset classes, especially at that time in the world. What we're seeing now is very different because last year when the NFT market had a quote unquote bear market, the global economies and the broader markets were not in a bear market and we weren't heading into a recession. So while NFTs were bearish during the summer before August or in October and November and December, the crypto market overall was still bullish. The equity market overall was still bullish. So that's the major difference now. Like, even if you compare it to COVID, like that was a black swan event. The economy was doing well. It appeared to be doing well prior to COVID happening. Then we locked down the world. We print a ton of money. Hundreds of thousands of small businesses closed around the world. And what we're seeing now is we're seeing all the ripple effects from that. Another thing to keep in mind is that when the global financial crisis happened in 2008, every central bank around the world put a Band-Aid over a gunshot wound. All they did was print a bunch of money to try to stimulate our way out of print our way out of a recession and a global financial crisis. And that it simply doesn't work, right? And we're seeing that now. Since 2009, when the stock market bottomed out, we've been on an uptrend ever since. I'm going to share my trading view chart so you guys can see the S&P chart since 2008. Hold on, let me switch to the monthly so you guys can just see how, and keep in mind that typically every 4 years we have a recession, right? So this is 2009, this is the crash in 2007. Down here, we bottomed on SPY at $70, and we've been going up ever since. This, you can remove this from the equation. This does not count. This is the COVID crash. This is not a bear market or a recession. This is a black swan event that caused this crash. So overall,
Manuel, with the COVID, like to answer Barry's, we had a light at the end of the tunnel that came in a few weeks, which is the vaccine, which gave people hope. With the recession, usually no country or no economy can get out of a recession in less than 2 to 3 years. This is the difference. Like with COVID, yes, it was a black swan event. The whole world is locked up, but in a few weeks we started to hear about a vaccine. It gave us more hope, so the market recovered. Plus, when we are going into a recession, everyone knows, and don't think about retail investors, think about institutions. They know it's a 2 to 3 years event. It's not as like a few weeks or a few months. This is the only difference here.
Yeah, and also, the vaccine and that type of stuff definitely plays a role. But the main thing that what we need to understand is the conditions that got us into this this right here, that caused this, was the money printing that happened in 2020. I always tell everybody this. We doubled the money supply in 2020. Every dollar that was in circulation up until 2020 was printed again in 1 year. So you need to understand that when something like that happens, there's nowhere for people to put their money besides in risk-on assets, because that amount of money printing and cash injection into the economy is going to cause an insane asset run-up, which is what we've seen since this happened in 2020. Equity market, crypto market, NFT market, fine art market. Anybody who's tried to buy a luxury expensive watch like a Rolex or AP or Patek will know that the prices of those have gone up 2 or 3x since then. Used cars have gone up astronomically. The price of homes has gone up astronomically. And now we're getting into so at first asset prices shot up, then the inflation starts to catch up where it starts seeping into gas prices, it starts seeping into grocery prices, it starts seeping into our utility prices, price of clothes, CPI, all those things. So what we're seeing now is the ramifications of what was done in 2020 and in 2008. We've been, ever since the United States took us off of the gold standard, for those that don't know, I believe it was in the 70s or the 60s where we were removed from the gold standard. At one point in time, every single dollar that was in circulation was backed by a certain amount of gold that was held in the Federal Reserve treasuries. What were we taking off? When did we go? 1971. I think it was Reagan that took us off in 1971.
Yeah, and they introduced the petrodollar.
Yeah, so what the petrodollar, for those that don't know, any nation that wants to buy oil around the world has to buy it in US dollars. What this does is it forces every nation to store their nation's wealth and reserve currency in US dollars, which is obviously very beneficial for the US economy. But what happens is that now the Federal Reserve can print as much as they want, and it's completely unchecked. Whereas before, in order for them to print more money, there had to be gold backing it up. When they took us off the gold standard, they've been printing ever since, and it really got bad.
And the reason why the dollar didn't collapse, even though it's not backed by any real asset, it's not collapsing because every nation buying petrol now, it has to buy it with dollars. Yes,
that's one of the main reasons that the US dollar has held its value, because the reality of it is that every fiat currency is confetti paper. The US dollar just happens to be the best version of confetti paper that there is. They're all shit. It's just the shiniest piece of shit right now, and it's the world reserve currency. So it's propping up and holding the value of the dollar. But what we're seeing now is countries like China and Russia have been slowly exchanging their dollars they had in their reserves for gold. And I think it's going to happen more and more, especially with what's been happening the past 24 months with the printing of money. So yeah, that's what got us here in the first place. And now what's happening and why things, in my opinion, can get even worse is that traditionally when the market goes into a downturn or a recession, the Fed loosens their monetary policy to provide aid and relief to the economy. I believe this has only happened once in history, but we're now going into a bear market and a recession where the Fed has to tighten their monetary policy, not loosen it. So typically when we go into a recession or a downturn, the Fed lowers interest rates to provide some aid. They may inject some more cash into the economy. Quantitative easing is the technical term for it. But now we're going into a bear market and a recession, and the Fed is actually raising rates, which is going to continue to put more pressure on the economy. They're tapering, which means they're not injecting as much money into the economy through the purchasing of corporate bonds and expanding their balance sheets. And another thing that we're facing right now is major supply chain issues, right? Like the global supply chain was shut down for almost a year. Like that's never happened in the history of mankind. And I think people really underestimated the ramifications of what that meant and what that was going to mean for us 2-3 years down the line, what all those stimulus checks were going to mean for us 2-3 years down the line. And that's what we're seeing now. We're seeing that displayed in grocery prices and gas prices and everything else. So yeah, that's the current stance of where markets stand, where the global markets stand, where the equity markets stand, where the crypto markets stand. And as I mentioned before, some of the things that we need to keep an eye on, what I'm sure some people's next question is, okay, well, if that's where we are right now, what needs to happen for us to begin to trend upwards again? What needs to happen for markets to flip bullish again, right? So there's a couple things that need to happen. I forgot to mention the Ukraine and Russia war that happened 2 months ago. That obviously made everything 10 times worse too. So there's just so much there's already food shortages happening. There's so many different variables that are playing out right now in the macro sense that are all affecting us right now. So some of the things that need to happen for things to stabilize and get better. Number one, CPI and inflation needs to get under control. As long as CPI and inflation is continuing to rise, the Fed is going to continue to have to hike rates even more. Tech, stocks, equity markets, they're all going to continue to get brutalized. So until that gets under control, the market's going to remain bearish. A ceasefire in Ukraine will be very beneficial for markets. While there's an ongoing war right now, going on. This is what I said this to everybody when the war started. Like, I don't think that markets are going to be bullish until this is resolved. There's a war going on and tensions are so high. You see China making threats to the US, and there's fears that a potential world war can break out, right? So these things all affect markets, and they affect risk on assets, which is what we're investing in, right? We're not buying bonds, we're not buying ETFs, we're investing in the riskiest assets in the world, crypto, and then even more risky and illiquid are NFTs. So when the markets go into a downturn, you got to realize the institutions are going to start liquidating their risk on assets first. So all their small exposures to crypto, which is most likely limited to ETH and BTC, is going to get liquidated first. Any funds that do have exposure to Web3 assets, just as NFTs, are most likely going to liquidate them first, unless they're just a primarily Web3 fund that only invests in crypto and NFTs. But that's what we see happening right now, is that major funds are liquidating all of their risk on assets, tech stocks, crypto, NFTs. And right now, fund managers' cash holdings are the largest they've been since 2001, which was when the dot-com bubble crash happened. So there's just a ton of money sitting on the sidelines right now, and they're waiting for these same things. They're waiting for inflation to come down. They're waiting for a potential ceasefire in Ukraine and Russia. They're waiting for the Fed policy to see what the Fed policy will do. We also have GDP coming out on July 28th. So what technically indicates a recession officially is 2 negative quarters of GDP growth. The United States economy had negative GDP growth for Q1 of 2022. And July 28th, I believe the first GDP estimate comes out for Q2. I think the official numbers come in August or September, but they release an estimate first. So there's a couple metrics that we need to keep an eye on. July 8th will be the next CPI reading. GDP for Q2 estimate number 1 comes out July 28th. If either one of those numbers are worse than expected, we will see more blood in the market. If they come out better than expected, we could see the markets rebound. So that's why there's no way to really predict when we will reverse, when the markets will turn around. We can only pay attention to the different metrics that institutions are looking at for when they're ready to deploy that capital, right? All that capital that's sitting on the sidelines, all that cash that they're holding, at some point it is going to get deployed. And when it does, we're going to see major growth in the markets. So what we need to do as investors is understand and learn the things that institutions are looking at to make their investments and build out their portfolios, and we need to follow those things. So inflation, CPI, GDP, unemployment is another thing that we need to keep an eye on, right? Because we haven't really seen, I don't know if anyone saw, but Coinbase came out today and said that they're firing 18% of their workforce. 18% of their workforce is getting fired. All new offers they sent out, they rescinded their offers. So we haven't really seen the labor market affected too much by what's happening in the economy and the markets yet. So that's another thing that we need to pay attention to, right? Is the inflation and rate hikes going to lead to even more layoffs? Will those layoffs lead to more foreclosures in homes? There's a trickle effect that happens from all the different things that are happening in the markets and the economy right now. They're all things that we need to pay attention to. I think real quick. So yeah, people believe, a lot of people will say that the markets are not correlated, but they absolutely are. And I think that's pretty evident right now. And that's why it's important for us to kind of pay attention loosely to what's happening in the global markets and in the global economy, to understand how we can protect our capital and protect our investments. Does anybody have any questions before we start going over strategy for the bear market and building out a portfolio and things of that nature? And KP, do you want to add anything before we move on to the next topic?
What will be your next topic?
What is the best strategy to come out of the bear market in better shape financially than when you started?
I wanted to comment what does all that mean for NFTs, but I think let me cover it after you cover how, like, transition to your next point, and then we go over what does that mean for NFTs, how we can build our strategy for buying, investing, launching NFT projects.
I think we could touch on that a little bit now before not the building, not the building projects, but I think we could touch a little bit on. No, I hear you. We hear you, KP. So before we move on to that, I will say that how does this affect, what does this mean for the market? How's it going to affect us? I believe that once those metrics that I mentioned start to level out and we start to see some positive growth in those numbers, in the unemployment, in the CPI and the GDP, the Fed will start to lower interest rates potentially, maybe a ceasefire in Ukraine. What I think will happen is I think that equity markets and crypto markets will reverse first. And I think that will then trickle into the NFT market. That's my personal opinion. You know, I could be wrong about that, but I do believe that we will probably see a reversal first in the crypto and equities markets, and that'll then trickle into the NFT market as well. You know, as we know, once people start making some gains off altcoins, they'll start rotating that profit into NFTs and vice versa. So you know, that's my current stance right now for the time being. I'm still just watching and waiting to see how things play out. So yeah, let's cover what the best strategy is right now, what my current strategy is, how we're playing this bear market, and you know what I think is the best strategy to come out, hopefully, you know, financially much better well off than when we started. So I liquidated all of my ETH and crypto back when ETH was around 3K and 2,900. I sold off the majority of my NFTs. I hold a few NFTs right now, but for the most part, 95% of my net worth that's associated with Web3 and crypto is sitting in USDC right now. Now, I know a lot of people didn't take profits, they didn't liquidate, they didn't sell, and now they're sitting with bags of ETH and altcoins and potentially NFTs that might be down, you know, depending on your entries, anywhere from 50 to 95%, right? And the question always arises, well, what do I do if I didn't take profits? What do I do if I didn't sell anything? What should I do with my NFTs? What should I do with my ETH? What should I do with my altcoins, etc.? Before I go into that, I'm going to say what happened to me in 2018, which I mentioned earlier. I started buying December 2017, January 2018. I flipped like $2,000 into 15,000. I didn't sell a penny. I rode it all the way back down into the March 2020 crash. I believe when the COVID crash happened, my portfolio was literally at $1,500 at one point. And then mid 21, it was sitting at 80, 90K. So if you are bag holding positions right now that you did not take profits on, whether it be NFTs or crypto, the most important question you need to ask yourself is, do you believe that they will be able to make it through this bear cycle alive? I think that's a bit easier to determine with altcoins than it is with NFTs, personally. I also personally would probably be more comfortable holding altcoins in the bear cycle than I would be NFTs. Mostly because of the liquidity factor, because God forbid, if you were in a situation where you really needed to get access to that money for bills, for family, whatever, you could liquidate a lot quicker with altcoins than you could with NFTs, right? I'm sure we've all been in a position where we needed to sell an NFT or liquidate a portion of our portfolio, and it doesn't sell right away, right? Unless you floor it for a really low price. But regardless, whether it's NFTs or crypto, what you need to be asking yourself right now is, do I believe that these will be here in 5 years? And if I do believe they will be here in 5 years, now is a good time to slowly start to DCA into those positions, start to slowly average into those positions, right? So for example, if you got into crypto and this was your first cycle and you bought ETH at, let's just say 3,700 or even at 4,000 or above, if you believe that ETH will be here in 5-10 years, if you believe that ETH will be substantially higher in 5-10 years, then it's safe to begin to slowly DCA into these positions. When I say DCA, that means it stands for dollar cost averaging. You want to pick a number that you're comfortable with deploying each month and set recurring buys on Coinbase or whatever exchange you use. And then what I do is every single week after those buys happen, I withdraw it onto my ledger because I'm not comfortable storing any crypto on centralized exchanges right now after what's happened with Celsius, after what's happening with what happened with UST and Luna. I just don't feel comfortable. I saw things in the terms and conditions of Coinbase that said that if they face bankruptcy, they could liquidate your tokens. Same with Celsius. If they face bankruptcy or insolvency, they could liquidate the tokens that their members deposited with them. So I don't feel comfortable right now storing my crypto on centralized exchanges. I pull it out onto my Nano Ledger and my hardware wallet. And then that DCAing that I'm doing is separate from my stable bag. So I have a bag of stables right now. 95% I set up my holdings to stables. That is reserved to make larger buys when it starts approaching levels that I feel comfortable making those buys in. That $200 a month that I'm putting into 6 coins right now is coming out of my salary. So what I recommend for people to do and what I'm doing is I looked at my monthly income, I removed my expenses from it, and then I took that number that was left over and I'm taking at least 50% of it and I'm investing it into stocks and blue chip altcoins right now. My personal opinion is that if you're going to DCA into altcoins, you should be DCAing into coins that have 300 to 500 million market cap or higher. I'm personally not really venturing into too many coins that are like sub 200. Definitely not buying any coins that are sub 100 right now. From my experience in 2018, every blue chip coin that I held did it 20x on the next cycle, and about 90% of the low cap coins went to zero. So I'm just, while I have certain projects that I'm watching that are lower cap, Wilder World is one of them. I think it's an amazing metaverse play, but it's sitting at a $15 million market cap. So I'm not confident that they'll be able to make it out of the bear market alive. If we were able to, if we see a scenario where we go into an extended bear market or a winter, a lot of those projects simply won't have the capital to survive. So for the time being, I'm only DCAing into blue chip coins that I believe will be around in 5 years. AVAX right now, Phantom, Engine, Matic, Gala, Theta, Solana as well. Not buying any ETH or BTC just yet. I personally believe there will be better ROI opportunities in other altcoins. You just have to do a little bit of homework and do some fundamental analysis and pick ones that you believe will be a leader in this space in the next coming cycle. And even if you look at, I was going over this with Disto yesterday, even if you look at coins like NEO or EOS, which nobody cares about anymore and nobody speaks about, they were in the top 20 in the previous cycle in 2018. But if you look at how they performed in this cycle, even if you bought those coins, even if you bought EOS, which some of you might not even know what that is, it peaked out at $22 in the previous bear cycle. It dumped all the way as low as $1.80, and then it went all the way back up to $15. So even that's almost a 10x, right? And NEO is another one that was very popular in the 2018 cycle. Now no one really talks about it. Even NEO went from a peak of 185 to $6 in the bear, all the way back up to 120, which is a 20x. So the top 100 higher market cap coins are always safer to invest in, simply because they still have enough capital to survive through an extended bear market. Whereas a project like Wilder World, as much as I love what they're doing and building, I don't know that the funds that they have left over at this point are enough to survive through a bear market. So I make a watch list of coins like this, like UFO gaming. I personally think that blockchain gaming will be one of the biggest sectors to pop in the next bull cycle. I think it's one of the most important pieces for mass adoption for crypto. So coin projects like UFO gaming, Cryo War, there's a couple other pretty cool projects, but they're just simply, you know, they're $4 million market cap. Like this is a shit coin right now, in theory, based on its market cap, right? So it's just too risky, in my opinion. It's just absolutely too risky to invest in these projects right now, to dollar cost average into them, to build positions in them, whatever. I'm strictly sticking to top 100 coins right now, preferably in the top 50. Like I said, that I believe will be around in the next 5 years. So 200 a month into each coins is what I'm doing. And then like the last dip, for example, I put another little, like I deployed 5% of my position size into those coins that I'm dollar cost averaging into. So, you know, I put like, if my total position size for a coin would be $10,000, I made a $500 buy or a $1,000 buy. And I'm just slowly layering in and scaling into these positions. That's the best way to do it. In the past, what I would do is I would get very excited. I'd see the dip, and I'm sure many of you have been here before, and you say, oh, that's it. This is the bottom, all in. And then it dips 7 more times, and you're sitting there just like, why? Like, why did this happen? And it happened because you never scale in 100% right away. You always scale in slowly into the position. Nobody knows where the bottom is going to be. Nobody knows what type of news catalyst can come out next week that could send us packing to the, nobody knows. Anything could happen. So your best bet is to scale into a position. What I tell everybody all the time is I'd rather be a little late to the party than too early. You know, I'd rather buy ETH at 1,400 than buy it at 12 and have it go down to 600 next month, right? That's just how I feel. I'd rather pay a little bit higher than buy and get cracked by another 50%, because the reality of it is we could drop another 30, 50% from here, realistically.
And Manos, you touched on an important point here for coins that applies to NFTs as well. As you guys know, volume is drying now, no volume on most projects. So some projects won't even be able to pay their team. They won't be making anything from royalties, and they can't mint any Gen 2 or Gen 3 from now on, that they won't make it out of this bear cycle. This is how so many projects came out, didn't even come out of the previous bear cycle, because no royalties, no money coming in, the founder gave up because he can't pay anyone, the team left. And this will happen again. So you need to keep an eye on what are the projects are making in terms of royalties per month. Are they able to pay their team? Do they have enough money in the reward chest to survive at least 3 to 6 months? And based on that, make your judgment. Like, yes, like what Manus mentioned, like we might have some kind of news next week and we go back to the bull run. But what if we don't? Some projects will die, and and those that won't die will be the winners of the next bull run. Remember, like I always tell everyone, Llama was a 0.05 literally in December. By March, it was an 8 ETH. Doodle was 0.8 in November. By February, it was 22 ETH. And the examples are endless. On the flip side, so many projects that I personally invested in, they just couldn't pay their team. Everyone left, and the project is dead now. So you need to apply the same strategy on how you play your crypto. The same with NFTs. You need to look at these metrics. Do they have enough funds to survive?
Another thing,
when I was speaking in the previous few minutes, I was wrong. I didn't hear what you said about NFTs and what all that means for NFTs. So we can cover it at the end.
Okay. Yeah, that's a very important important point. Another thing to consider, like, think about projects that minted at 4,000 ETH and didn't convert any of their ETH into stables. And here's another thing to consider: they owe taxes on that original sale, and they're not going to be able to write off those capital losses. So there's a lot of things to consider here to evaluate, which is why I'm personally not purchasing NFTs right now. I will wait till the market remains flips bullish and we start seeing volume again before I start accumulating NFTs. I feel comfortable starting to slowly accumulate altcoins at this. Yeah, Alpha Geek. I'm sure projects are violating all types of tax laws. Yeah, I'm sure that's a whole different, whole other issue entirely. But yeah, I just don't know. There's no way to really predict, which projects will be around in the next cycle, whenever that comes. And I think that you can't predict with certainty, but I think it's easier to predict and evaluate altcoins, especially blue chip altcoins with $400 or $500 million market caps. Even if you look at a project like Theta, right? Theta, which is looking to build a decentralized YouTube, they have the co-founder of YouTube, co-founder of Twitch, and the CEO of G Fuel as advisors on their team, as well as the chief network officer at Verizon. So an absolute star-studded team. They have all types of other advisors and team members as well. Now, this is still a $1 billion market cap coin, right? Now, it is down over 15x from its all-time high. It hit a all-time high around $15, and no, it's at 10x, so it's a little bit more. It's at $1.13, and its peak was 15. So that is 13.5x from its all-time high. And this is a blue chip coin with a star-studded team, a docs team, $1 billion market cap. I can predict with a higher degree of certainty that Theta will be around the next cycle than I can predict if an NFT project will be. And that's just where I'm comfortable with my risk appetite right now. If you want a dollar cost average into projects, just make sure you do fundamental analysis and make sure you're, if you're averaging into your positions and bringing your cost basis down. I still think that we can go lower on NFTs, and I just don't know if it makes sense to park your money there when volume and liquidity is so low, because if we go down even lower, you might have a difficult time pulling your money out. You're going to lose money to fees. ETH can go down as well. So for me, I would rather, as I mentioned, keep my USDC, have my capital on the sidelines ready to go, and deploy it when I get actual confirmation that we're trending upwards again, that we're in a bull market again. And yeah, that's where I stand right now. As far as NFTs, I'm not making purchases, and I'm slowly dollar cost averaging into altcoins, but I still have almost every penny that I made from the previous bull in USDC. That money that I'm DCAing with is aside from that. So I'm reserving those funds for when ETH and BTC get into those juicier price levels that I think we're going to come into, and I'll start making heavier buys. I might deploy 20% of my position size or 25% and just start scaling in there. Shar, do you have a question? I saw you unmuted yourself. No? Okay.
Yeah, just one question regarding
sure.
coins that are yielded by NFT projects like Jira from Gojira and Always from Kaiju. Is that like a lot of people say that that's a good way to enter an ecosystem at the lowest point. If you're bullish or if you have any conviction on whatever project, is that something that you'd look into?
So you're talking about accumulating coins for NFT projects?
Oh yeah.
So hold on, let me pull something up for you guys. I'll show you guys my screen. I have a crypto watch list. So I do have some coins that are on my NFT coins this is my current crypto watch list. I have it broken down by sector. I could share it with you guys if you like. So I have a list of NFT project tokens. On that list is Magic, World, Lumi, and GP, Wizards and Dragons. I have this ridiculous bag of Wizards and Dragons. My first major loss in the NFT space. I threw 20 grand in. It was actually my first big trade, and it went to zero. So I still have like 700,000 or something GP tokens. So I have that on my list in case they ever reverse. But yeah, like, for example, ApeCoin, like that is a cheap entryway into the Bored Ape Yacht Club ecosystem. You know, we have other deeds now, which is a cheap entry point, but even that might be expensive for a lot of people. So yeah, buying coins can be a good cheap entryway into an NFT project. However, until the NFT market is bullish, I wouldn't be accumulating any NFT coins, because the reality is, unfortunately, the NFT project tokens get slammed way worse than the floor price of actual NFTs. Anybody, you know, if we look at Cool Cats, one of the major reasons that Cool Cats had so much trouble is because their play to earn game had issues, and their token just got absolutely obliterated. Like I bought an ETH of this milk token too, and we got absolutely wrecked on this trade. Where is this thing? Can't even find it. I don't know where it is.
Make it easy. No NFT project with a coin, that coin will never do well. It happened once with the cybercons because it was the only one. Now, since every other project has a coin, holders generate these coins just by holding the NFT. Most people will dump it for ETH.
Yeah,
it's never a good investment. Like, lesson learned.
I'll explain to you why it's not. Okay. Do you believe that let's just look at Kaiju Kings, for example, or let's look at Gajira. I think it's an easier example. Gajira has probably what? Maybe 2,000 holders, verified holders in total. Do you believe that a token economy can survive with 2,000 holders? Do you think any altcoin could survive if 2,000 people were using that token? What the problem is that it does not build a sustainable economy, right? Having a whitelist marketplace where you buy whitelists with tokens is not an economy, and it's not sustainable. And that's why we see NFT project tokens get absolutely obliterated. Something that's very interesting and something that project owners need to be taking note of is Psychedelics Anonymous and what Valtura is doing with his token. So they plan to release a Psychedelics Anonymous token. But before he releases that token, first of all, they have a Web3 accelerator program where they had a couple hundred holders apply and submit projects and Web3 projects that they want to launch that Psychedelics Anonymous is supposed to help fund. I think they took on about 150, something like that. And I believe like 10 or 20, they're going to directly fund with USD from their treasury. The rest will be funded with Psychedelics Anonymous token, and they will be forced to integrate the token into their economy. That's number one. Number two, they're releasing a mental health app, which and service that other NFT projects can integrate with their community. And guess what? You need to book it with PSY token. So Valtura realized that it's not sustainable to launch a token when you only have 4,000 or 5,000 people using it. However, if you can create an ecosystem of 100 projects, all incorporating their token into the fold, as well as release a product that other Web3 companies want to use, create a demand for that product, and then make them purchase that product in your token. What you're doing is you're creating a sustainable economy that can last long term. What we see happen now with tokens is we're in a bear market. Guess what? Whitelists are drying up. Not many new projects dropping. What happens to tokens? They get absolutely wrecked. I think Jira token, and I'm a Jira holder myself, I think Jira token was I remember seeing it at $22 at one point, $15, and now it's at 30 cents. So the utility for these tokens dries up in a bear market, and then they're like almost becoming useless, right? Because there's far less projects to begin with, and the quality of projects dries up substantially. So you either have people not using their token and saving it, or they're just selling their token to get some type of liquidity and profit back out of their investment. And that's why we see this happen. Disto Apes is no different. Disto Apes has a token, and the main utility for the token is the same thing. The utility for the token is purchasing whitelists on the marketplace. We just had our Elder Apes burn, and now the utility dries up. Same thing happens. and we could go over this again and again. The only one that ever
You
has
can go to honey from Bears Deluxe, you can go to
Any-
banana from CyberCons.
any one of them.
Every token looks the same.
Yeah.
Only Ape
So
coin.
are you guys saying that essentially projects that have such tokens are essentially capping themselves because
Yes.
people mentally associate the value of that NFT with the value of the token that they can
Yeah.
passively own.
Exactly.
Yeah.
Actually, the floor price will be pegged to that token price. Like I can look at I don't know why we can. Linus, can you check banana's chart? Like CyberCon, I can point out to the day that CyberCon did all-time high on the Genesis when they reached 200 ETH floor. It was when banana was at like $150. And we know that $150 means that each Genesis holder was making $1,500 a day. That's almost $50,000 a month, which made it look like 200 ETH was cheap floor. But from there, it kept going down. I think banana now in the like $5-6. And this is why the Genesis Con is no longer attractive. This is why it's like, I don't know, last I checked it was in the 20 to 30 ETH floor. And it is an OG project. So the problem with tokens, now your floor price isn't dictated by any marketing you do, by any branding or IP you build. It is dictated by the price of your token. And historically, we found that these tokens, regardless what you do, they won't hold the value.
Yeah. Like if I plan to launch a collection at some point in the future, I would never do a token. Your floor price is connected to your token. We look at Lumi. Lumi peaked out at 70 cents. Now it's at like fractions of a penny, not even close to a penny. We're talking about fractions of a penny.
Yeah.
And if you look at their floor price is directly correlated to what? Their token. If we look up the chart on their price, what was this? March 25th. This was January. Hold on, I gotta extend the chart. This is only 90.
Yeah, I think that its peak creeps holders were making like 40 a day just by selling low.
Yeah, it was ridiculous. When I look, so my first project was Wizards and Dragons. So I bought so many wizards. I was making like 1,500 a day. I was telling all my friends that I'm gonna be rich. I'm gonna be a wizard trainer. I'm quitting my job. I don't need to work anymore. I have 15 wizards. They're going to pay me $150K a year. I could just trade and make money off my wizards, and I'm going to be the next Dumbledore. And I was in for a rude awakening about 5 days later. So when I saw everyone tweeting like, yo, my creeps is making me $300K a year right now, and it's just an NFT, like I knew that shit was not sustainable. And this is the overall top peak on the chart on January 25th. And January 25th.
Manos, remember how we were attacked when we told people to sell at 10 ETH?
Yeah, I know. I told
like literally in our community, people attacked us when we told them 10 ETH is like unsustainable for a 3 weeks old project. That this paying for ETH a day, like this happens only when you are sleeping and having a sexy dream. This never happens. And it closed 90% of its value, and now it's a good project, and this can't be revived.
Even that's the other thing. Like when your whole project is a play to earn game, and your token gets obliterated like this, it's worth 99% drop. And their floor price also went from 12, I think 11 ETH or something like that, right? Like
yeah, it peaked at 12 or 13.
Yeah, that's also a 90-something% drop. So, and we saw the same thing with Cool Cats when their game was unsuccessful and their token got absolutely obliterated. Their floor price got also obliterated at the same time.
But they saved themselves with the announcement that they will be focusing on the IP, on the brand, because here's the alpha, guys. Utility projects will be good if the utility is actually doing something for the holders. Marketplaces are not a utility. tokens will lose their value. If you have a brand and you can build that IP, like Cool Cats, they had a good IP. They were an OG. Like they deserve to be a higher floor than Doodle and Azuki. But when they transitions to be a play to earn and start to dabble with the token, this is where they lose their mojo.
Yeah, I mean, if you look at their token dropped in February. This was their peak in February at 15 ETH.
I think they reached 10, 15 ETH.
17 ETH was the average price here in February on, oh no, this is January 29th. Where did their token drop? Their token dropped in February 15th. February 15th is right around here. And as you can see, this is where their token dropped. It's been what? Consistently downtrend ever since. I know that the market conditions also haven't been great, but as we know, Cool Cats has gotten hammered way worse than a lot of the other blue chips, right? Worse than Doodles, worse than Bored Apes. Cool Cats went from 17, 16 ETH down to 2.4, I think, at their lowest they hit. So yeah, having that Cyberkongs is at 20 ETH, I think, and they were at 100.
And then check the babies. Like I know for a fact the babies reached 16 to 17 ETH, now at 2.3, another almost 85 to 90% drop. Genesis reached 240, now at 24. This is a 90% drop.
Yeah. So having that, the only project that had a sustainable token launch was ApeCoin, and we know why that was. They did a $400 million private pre-sale seed round. So,
but with ApeCoin, it was different. To start with, it's Yoga Lab. It's like they are playing on a different level. It's not daily or weekly or monthly yielding. It was a one-time thing. Unlike most projects, like if you look at most projects, if you hold Cyberpunk Genesis, you make 10 bananas a day. For ApeCoin, it was one claim and that's it. Even if you have an ape, you can't generate any more ApeCoin.
Yeah, so you can't have that constant sell pressure. Like when you have a token that's being generated daily, you can have constant sell pressure, and especially if you have whales that accumulate large amounts of your NFTs, they will constantly sell their tokens because they're looking to get a return on their investment. How else are they supposed to do it? If they sweep 100 of your NFTs and they're a believer in the project, they're not going to sell, and you're generating a token for them, they're going to sell the token. They're going to need to see some type of passive return on that investment, and they're always going to liquidate that token first, especially when we go into a time now where literally like the one and only utility for these tokens is basically gone, right? Like the whitelists that are even hitting the market, like people don't want to buy them, right? And that's the primary use of all these tokens, or it's for a play to earn game that nobody plays, whatever the case is. And even if we look at Yuga Labs, it still did a 90% drop from its peak. So, you know, even Yuga Labs is not you know, excused, invincible, right? And they had a $400 million pre-sale round for this token. So, you know, and once again, they had that smart, the one-time airdrop is definitely a smarter way of doing it, because it doesn't allow for holders to have that continuous just sell pressure day after day after day, week after week, whatever, however they have the tokens, the token claim set up. Any other questions before we move on? No, yes.
Few more questions. Manos, did you touch on what does the bear market in crypto means for NFTs?
Yeah, I mean, briefly, you know, typically, so a lot of people, when we started having ETH dumping, people were like, oh, well, usually ETH go down, NFTs go up, right? Yes, last year that happened. Why? Because we were not in a recession and an overall bear market across every single market. That's the difference between last year and now. So whereas last year ETH would go down, people would start pumping NFTs. The problem is right now, everyone is just very fearful to deploy money at all. So even though ETH is at $1,000, right? How many ETH maxis and NFT maxis did you hear talking about? Oh, I can't wait for ETH to go down to 1K. I'm going to buy all of it. I'm going to buy all these NFTs, and they're not buying shit because the circumstances for why we're here in the first place are preventing people from deploying capital, right? People are afraid. People don't know where the bottom is going to be. You know, you're going to spend 30 ETH or 20 ETH on an NFT right now, and that could potentially be half of that in a month. And on top of that, ETH could also be down another 50%. So we just don't know. And I think that's why we see the extreme low liquidity that's happening in the space. Not to mention that people just don't have money, right? Like a lot of people who were trading in the NFT market, let's face it, for a lot of people, this was their first investment ever, like ever. You have some people who were coming from the crypto market who have experience trading the crypto markets. You have some people who are coming from traditional finance markets who have experience trading other markets. But I think the majority of participants in this space, this may have been one of their first investments ever, not to mention one of their first bear and bull cycles ever. So a lot of people did not sell, they didn't liquidate. So they're holding a massive bag of illiquid NFTs right now, and they don't even have liquidity to buy up these dips. And I think that's another thing that's playing into why we don't see positive price action on NFTs right now with ETH lower.
Let me bring some positivity to this. There is like a light at the end of the tunnel for NFTs. I think, and I discussed this with Manos, I think he has the same point. Once we find and like get to like an agreement that, okay, the $1,000 or $900, whatever the price of ETH will be the bottom, we will go sideways for a bit. And that will probably be where the NFT market will be revived. Not saying it's going to be another bull run, but it will be in a better shape, because here's the thing. Now everyone is scared. No one knows where is the bottom. Is it 900? Is it 500? Is it 1,000? No one knows. Once we start seeing like more data and insight that we are at the bottom and we will go sideways, that will give NFTs some more life. The 0.05 gas won't look crazy because it will be like a $40. And remember, 0.05 a few weeks ago, it was like $200 to mint something or to buy something from OpenSea. And it will be cheap. Like imagine, like, what if I told you a few weeks ago that you can buy a doodle for $5,000-6,000 USD when it was at 22 ETH and ETH was like $3,500? It was worth over $100,000. And now you can buy it for $5,000 or $6,000. And keep in mind, projects like Doodles, projects like Bayek, Mayak, these projects won't die. These projects have a war chest with hundreds of millions of dollars. So they will be there in the next cycle. And that will give, we will start seeing a new meta emerging. Like we had this utility meta in the last few months. Now we know that this doesn't work. And we need to see what will be next. And then we will see a reversal in the market. Volume will go up in ETH. It won't be up by much when it comes to USD, but at the end of the day, for most people in NFT, and I know many people disagree with this, but 1 ETH for us will be 1 ETH. Yes, at the end of the day, we pay the grocery with USD, but for me personally, for probably everyone in here, if you are liquid and are able to buy Doodle or any of those blue chips for between 5 to 10,000 USD, you will do it. And you will be able, like if anyone is launching a project, you will find what is the next meta. Don't jump into projects just yet. The market is still very bearish. I even looked at the data on Dunes. Most of the volume yesterday was just for blue chips, the top 10 projects. Like 90% of the volume went into 10 projects only. So this is how I personally see the NFT going back to not a bull run, but in a more normal stage than what we are in now. Manos, your comment, the NFT market?
Yeah, we need the ETH price needs to stabilize. I think that the NFT market could see some positive price action once ETH stabilizes. I think that for now, with ETH dumping every other week, you know, people are just reluctant to deploy capital right now. But I think that if ETH was to stabilize, let's say in the you know, in the 900 range, just hypothetically speaking, and we are able to see that, okay, this is going to stabilize here for a month or 2 months, I think people will start deploying capital back into the NFT space. But one of the reasons that I am personally hesitant in deploying capital into projects right now is because one of my concerns is that the shiny toy effect will be in full effect when the next bull run comes back. And what I mean by that is that a lot of the older projects won't be the focus of attention in the next cycle. I think that a lot of new projects will come out that will be the center, the focus of attention. You know, obviously blue chips and reputable names in the space will see positive price action, right? The top, you know, doodles is I'm not gonna say Zuki, Bored Ape, Cool Cats, projects like Llama, Gajira, Kaiju, you know, OG projects that have continued to build through the cycle and manage their treasuries well will most likely see positive price action, but we just don't know what those will be. And that's why I'd rather wait and wait for that stabilization on ETH and wait to see more volume start coming into the NFT space and then start making my buys. Will I catch the exact bottom? No, probably not. But once again, I'm okay with being a little late than too early, especially when it comes to NFTs, because, you know, if I deploy capital into altcoins right now, even if I deployed my whole bag and I realized in you know, tomorrow or the day after that I was wrong, I could liquidate the whole thing and take a small hit. Whereas if that happened with NFTs, I'm going to take 7 to 10% hit just on fees, and I won't be able to sell it all right away, and the gas fees associated with purchase. So it's just, for me, it's just a little too risky right now to deploy large chunks of capital into the NFT market. Does that mean we're all going to zero? No, that's not what it means. It just means that right now we need to preserve our capital. That's the number one most important thing in a bear market. And in order to preserve our capital, we have to wait to deploy our funds until we have that confirmation that the market is beginning to trend upwards again. So that's where I stand right now. I have a list. I have a watch list of projects as well that I'm watching for NFTs, and yeah, I'm just waiting and being patient. Like I think the most important thing right now is for people to be patient. I know a lot of people are, you know, and I've been like this in the past too, where I just want to rush to deploy capital and I get eager and I start seeing, you know, NFTs get into these price targets that I've been wanting to buy them at for months, or I see altcoins getting into these price targets that I wish I could have bought them for last cycle. But it's important to just be patient. Be patient, sit on your hands. That's something that comes with experience. You know, the wallets, I track a lot of wallets of the top traders and whales in this space that I've curated over the past 6 months. And I don't see a lot of buying going on right now. We look at fund managers' cash holdings. They're higher than fund managers holding most cash since 01, right? So smart money is sitting on the sidelines. We see the US dollar spiking again, right? This is when people pull their money out of the markets. We see the US dollar go up. The Dixie is the US dollar index. As you can see, it's been pumping. Hold on, let's pull up the 3-month chart. It's just been up since March, which I think was around the time the war started. I'm not sure, but yeah, it's just been going up. So this is telling us that people are pulling their money out of the markets and sitting on the sidelines. They're not even purchasing bonds because bond yields are spiking at the same time too. I think they're the highest they've been in quite some time. Yeah, as you can see, bond yields are spiking exponentially. So this is also showing us typically what we'll see is the Dixie will go up because people are pulling their money out of the equity markets, and we'll see bond yields start to drop because people are purchasing bonds, but people aren't even purchasing bonds right now. They're just keeping their cash on the sidelines. So we need to, as investors and as retail traders and investors, we need to learn and understand how institutions move their money around and how they trade, because institutions are the ones that are always making money. Market makers are always making money. we need to try to follow the trends and understand what they're doing. And right now, what they're telling us is their money is parked on the sidelines. So that's where my money is parked at as well. And once that capital starts getting deployed, we'll start deploying it. That covers, I think, just about everything that we wanted to speak on today. Does anybody have any questions before we start wrapping it up? Oh, okay. Okay, guys. Hold on. Did we talk of why as project founder is crucial to understand? Oh, yeah. Last point before we wrap it up. You know, as founders, why is it important to understand these things? It's important to understand these things because number one, it's important when it comes to managing your treasury as a founder and managing your funds, knowing how to deploy those funds. And also when it comes to releasing your projects, right? We look at Lonely Pop, you know, they have OX Studio advising them. I'm not sure what exactly they were thinking, launching at a 1.5 ETH mint price today. But, you know, they launched at a terrible time and they failed. And they paused their mint and they're issuing refunds to holders. NFT Sensei is another example of a project that apparently has an amazing tool, from what I've heard, one of the best trading tools to be released. But they minted on Saturday when ETH was collapsing at a 1.25 mint price. I don't know why they did. You know, I had people in Disto arguing with me saying that they're going to be 3 to 5 ETH. I said, absolutely not, guys. Like, it's a bear market. People don't need tools right now. They're not even trading. Why would they spend 3 ETH on an analytics tool? And they're sitting at 50% of their mint price. So as a founder, it's extremely important to know when the right time is to release your project or second collection or updates on your roadmap, right? Like if you have an amazing update right now, might not even make sense to release it right now because nobody's even going to care, right? We saw the proof of stake update pushed on the ETH network and it didn't have even a slight positive impact on the ETH price. So this just goes to show you that even if you have a great project and a great team, that dropping at the wrong time can be very detrimental to your project, right? And this could have been one of the best, potentially maybe is the best NFT analytics tool, but it's sitting at 50% of mint price 3 days later. So that's the last point I wanted to make. I forgot to touch on that. That covers everything. And if nobody has any questions, we will wrap it up.
Just to touch on the NFT Sensei, I had a guy. He's a very big like marketing investments guy from the Wall Street, and he invested like 12 NFT Senseis because he thought like, yeah, the bear market, everyone will need a tool, and I didn't really get it. And now he's sitting like you said, a 50% loss.
Yeah, I'm not sure what his logic was. I feel like that's the exact opposite of the case. Like this is the time,
exactly.
This is the time when nobody needs a tool. Like I'm gonna be honest. Like I bought an NFT Nerds yearly subscription like 3 weeks ago. I think I've opened it like 3 times entirely. Like I barely opened my MetaMask. Like there's no plays right now. So like you have to think as a project founder, like, is someone gonna spend $3,000 on our tool when they might not have any liquidity to begin with and there's no plays in the market and we're going into a recession? Like people are going to be tightening up their spending, like groceries are through the roof, rent is going up. Like these are all things that a founder needs to consider. Like a lot of founders, I feel like, are just trapped in this little Web3 bubble where it's like, you know, NFT land is its own little world. It has its own time. It runs on dog years. Like people are just like stuck in that world and they don't pay attention to it, but you have to, because it impacts us. And you know, NFT Sensei and Lonely Pop are just 2 examples of that, but there's so many more. So yeah, it's important as founders to kind of pay attention to these stuff.
Yeah, I even sold all my notes from Dusky because I don't see any value in them right now. I don't need a note in this market. And when I need a note, I will get them for free, like from other projects, because everyone has a note at this point.
Yeah, exactly. Like during the bull market, you know, NFT tools and utility passes were the hottest thing. Now you got Flipper. Flipper is like half of its mint price. You know, pre-mint went from 3. Pre-mint is one of the only ones that's really holding a high floor. It's sitting at 0.83, which is still, you know, like over 2x mint price, which isn't bad. Let's look at what NFT Nerds lifetime passes. NFT Nerds is still holding a nice 4.5 ETH floor. So, but overall, a lot of the tools are taking a hit because people just don't need them as much. All right, guys. Thank you for joining us. We will wrap it up. I think we're gonna host another session in like 10 days to 2 weeks, and I recorded it, and I think Astra and Barry's are gonna make a channel where we can post the recorded sessions for you guys to reference back to if you ever need.
Appreciate you guys. It was very, very insightful. Thank you,
Thank you
Casey.
so much.
Thank you, Manus. Thank
No
you,
problem.
everyone, for
Yeah,
listening.
it was amazing.
No problem.
Thank you, everyone.
Take care, guys.